Morning guys, we're at a very historic milestone. We've crossed -30 SSI, so that just says 30 people. Okay, get that in your head, right? There's 30 people trying to sell indices versus the one person buying. There's 30 bears to the one bull. So basically we're going to have to see them get liquidated, and this is why we're pumping to all-time highs, because of the retail sentiment. And you could argue the fundamentals are in for a rally. Not looking at the yield curve though, because that's indicating risk off. This is indicating risk on. Technicals really pumped, and the treasury yields fell and the VIX fell, dollar fell. Japan didn't do too good, but you know, it's just something to note really. But I mean, the US indices really pumped, and the change from last week, we saw them change. They added short on France 40, UK 100 and US 30, and they also sold oil a little bit as well. And so that's the spreadsheet. Do the QDB scores quickly, and so we had the risk on currencies at the top. If you remember, I was saying this week that was indicating risk on, because the the risky currencies at the top, safe havens at the bottom, and so they've gone quite long dollar. They've gone really long, so it's obviously fallen. They've shorted the yen, so the yen's pumped. They shorted the Aussie, and that's rising, so that could probably do a little bit better. They've really shorted the Australian dollar. Robot, we okay, that's strange. We had a lot of losses yesterday, so what we're going to do now is that we're not going to trade the high risk events. It's something like the CPI or the FOMC or the NFP, or next week we've got the PCE, the personal consumer spending. We're going to avoid that, so we'll have the robot run Monday, Tuesday, Wednesday, Thursday, but Friday morning we'll just put it to sleep, and then we'll wake it up Sunday night. And what the reason for it is that we can't cater for the wild swings on like this, for example. Like, it doesn't look that bad, but it's actually an 80 pip move. That's just ridiculous. That went on to loads of stops. See that blue line there? That's a stop loss cluster. Went up to take stops. So the robot can't handle an 80 pip move in the space of a H4. Okay, it can handle like normal moves and stuff, but it can't handle these massive wicks. And the thing is, horribly, is that it just went up to take stops, and then it just resumed its downtrend, and now we're pumped. So the SLC there is of note, 12666. So we're 16 pips away, which is likely, and it's going to grab that, and then we'll probably come down and get that one. And in an ideal world is that we implement the stop loss clusters in the robot. That might be something to think about in the new year, where I'd just manually enter it into the SLTP, and then we can target stop loss clusters. Something to think about. So the robot, we had quite a big loss yesterday, but at least we know what to do. We're just going to avoid the high risk events, and it's kind of frustrating. I wanted it to be fully automatic and autonomous, but these markets are just incredibly cruel and quite evil, actually. So they shorted gold, and the US Treasury yields fell, so that lifted the gold fundamentally. Sentimentally it did okay, but the fact that they'd sold, actually they were selling prior to Powell, and they got really punished. See the down arrow there, they sold it, and so there's gold going up. And DAX 17,000, and we've kind of really responded off that 17,000. You probably work out what happened there. Stops, basically, just a big stop from, and they're going less short as indicated by the crossover. So this is horrible, isn't it? It's quite evil. It's not very nice. S&P's falling, so that's fine because they're going less long. They're going less short. Sorry, I had a late night last night. I had about 5 hours sleep. So, but yeah, they're going less short. Yeah, so this basically what less short is that telling us that the bears are having to leave the casino after undergoing humongous losses. So that's of note. So that's okay, because you know that we had the crossover, US 30, and then I guess it might go back to bed maybe. Oh god, and you know they'd sold it, so US 30 can do okay, and yeah, we shouldn't really be falling on this candle here. We should be pumping the fact that they'd sold. All right, they'd sold here, so there's going to be a big box of support here on that candle. Head shape. And by the way, this dark theme, I don't know if it's any good to you guys, but I might keep it. I'm not sure. It's a bit of an effort to change it back, to be honest with you, but this is going to be a support because they'd sold, and so we're probably going to come back in that support for a bounce. And that's it really. So complete 8 behavior on the indices, and we hit a record. We have hit a milestone of -30, which I never thought would be the case. We'd never see it that extreme, but here we are. So trade safely. It looks like the indices might be falling temporarily, but you've got to be careful because they're going to pump it probably later. Alright, and you've just got to be really careful, and it's putting a lot of pressure on the safe havens as well. So be really careful for trading FX and gold, because they're under fundamental pressure right now. Okay, so trade safely. I'll speak to you guys soon.